All right, welcome back, everybody. This is Wes with the second video for this weekend for market action that ended March 5th, 2021, and this is the metals and miners update. And we've got to start with looking at the two main fuels that I've been talking about that need to be in place in order for metals and miners to rally, to get out of their 7-month funk. And one of them is right in front of us. It is the U.S. dollar. And I have the U.S. dollar approaching kind of a thin red line. It's not an invalidation level because I have this 4 wave, which would be of a minute degree. It is allowed to trade into the 1 in this 5th and final wave down of what I'm charting as a primary wave 2. But it's kind of right at the top of this channel that I've redrawn here that connects really well off the lows. So we really don't want to see that U.S. dollar move up and out of that. Now, did we kind of get a candle that maybe is like the topping candle? It's a little bit zoomed out here. That's not quite a shooting star, but it could be a topping candle off of a 3-wave move. And if I look at this right here, which would be labeled the C leg, I can count 5 legs up to finish. So 1, 2, 3, 4, and 5. So we need to see U.S. dollar reversal and weakness. And if we can, I think that will also be one of the fuels that will trigger a general rally in equities across the board. So then I've got targets around 86 to 87. Now with the redrawn channel, it's possible into the summer is when I'm now projecting that these moves will culminate. We could see it all the way down into 82, 83 if we really get some sustained weakness in the U.S. dollar. Okay, now I want to move over into just a chart of FinViz, looking at the futures, and I've been talking a lot about bonds, and so you're looking here at right off FinViz of the 10-year Treasury note, and you see that in the lower right corner of that chart, you see what I think is a bullish hammer candle. I think we got a capitulation low, not only in stocks, but also in bonds. Okay, now you're thinking, well, wait a minute. I thought that stocks and bonds moved inversely, and that is actually not true. There is actually not a statistical correlation that says that you should play these two as a pair. It is not true. And I would argue for the case right now for the markets is we actually need stability in the bond market. We have seen weak U.S. Treasury auctions. We've seen overnight repo rates that have gone negative, which indicates that there has been a massive amount of short selling in bonds. And we simply need that selling to end. We need stability in our debt markets and liquidity in order for there to be some form of safety and security for these companies that require overnight or weekly or monthly lending to roll over on their balance sheets. So this is a critical part of the thesis. And if bonds continue to sell, interest rates continue to rise, the pressure on growth stocks here, like from the NASDAQ, that is just going to continue. Okay, so those are the two main pieces of the thesis. You're going to see, again, what looks like a hammer candle here on the 30-year bond. This is what we need. So we need weak U.S. dollar, and we need bonds to catch a bid, and we need interest rates to fall, because what we know is happening behind the scenes, whether or not the Fed or the Government Bureau of Statistics is telling the truth, we know there is inflation. We absolutely know there is. So if we see interest rates fall while inflation continues to move up, that increasingly negative real rate does have a powerful correlation to big moves in metals and miners. And that's where the thesis stands. Does it kind of hang on the edge of a knife? It certainly does. Now, I had talked in my general stocks A to Z video. We absolutely got important stick saves in the general markets. Did we get it in metals and miners? Now, the answer is is maybe. It's only a maybe because we didn't really see gold or silver move up at all. GLD was flat. In fact, earlier in the week, this was on Thursday, it invalidated my most bullish count, which does, I think, from my projections, and I'll be totally willing to adjust this if I'm wrong, it does temper a little bit my longer term price appreciation expectations for gold, but it has not invalidated any bullish count. We simply need to see gold and silver catch a bid off a weakening dollar, off of interest rates reversing and stopping their rate of increase, and it's just got to start marching back up through this massive flagging channel. Okay, so moving up on an invalidation level is I have this line marked. We need to see GLD first above 165.79, and we need to see it next above 170. These are the two invalidation markers for the bear count. So you see a red one down, two, a red one down. Those are the levels that have to be overcome. Otherwise, if we see the bearish thesis take over, we're just going to tumble. And in that case, I don't have it here because I don't have the weekly up. In that case, we're probably going to see gold correct itself below $1,000 an ounce. And that's just going to be awful for those that are committed to this sector, but we have to at least entertain the possibility, taking the evidence all the way around. Here you see what I hope is bottoming action off of that lower touch. Here you see those levels. So this open gap, that open gap needs to fill. Now it could still fill within the red bearish count. So if the dead cat bounce team, if they win their thesis, we could still see that fill, and then that would be the rug pulling move that would then perpetuate and provide more short selling fuel to this red trade. Okay, we got to go through GDX. So GDX with 2 weeks in a row of active touches off of this lower bull flag. It does tell me this is the right channeling technique. Now, there is not divergence, but we did reach an oversold level. So you reach an oversold level off of the weekly, and you're typically looking at bounces. If I take you back to March, we got that oversold level at 29, and then it also didn't have divergence, by the way, and then we got the massive bull run. So we've got that possibility in place. The sentiment against this sector is extreme. I think I saw one sentiment reading that is less than 20% bulls. That is actually, I think, what we need. And I expressed this in my stocks video as well. I actually think the less people and institutions that participate in this bull move, the better. I really do, from a contrarian perspective. And that, I think, we have the initial setup for that to occur. So GDX, just like GLD, it's just got to start moving. It's just got to start. It's got to attack the midline. It's got to attack the MA cluster. It's got to get through this diagonal, which is now, it was support. That broke a couple weeks ago. It's now resistance. And then ultimately, it's got to get back above. This is a long-term pivot at 39. Getting back above 39 is going to be huge, because that's going to get it back above the B wave of this double zigzag. And then it can start thinking about getting back within its old bull channel. Okay, if I take you into the short term, like gold, if it's a bear, it's just going to tumble. And yes, could we see kind of an internal bounce? Yeah, this 4 could continue. This gap didn't fill. Okay, so as long as this price here, this low price of wave 1 at about 32.55, as long as that doesn't fill, then we've got confidence that this third wave down can continue. So there's your invalidation. I've got it marked as 32.7. It's actually 32.55. That would be your confirming move. And what I did like right at the close, we did get a close above that 200 period MA. However, we've seen false breakouts, 1, 2, 3, already four times. So it's in prove it mode. Okay, now one of the big names within GDX, so we've got Newmont Mining. And Newmont Mining put in not a lower low, it put in an inside week. So up almost 4.5%. I love its bounce off double support, off this rail and off this diagonal support. We've got to see the big boys within GDX get going, and maybe we have seen a bottom in Newmont. Okay, let's get into now silver, and let's see, that's the daily. We'll pop back to that in a bit. Let's look first at PSLV. So PSLV has been gaining a lot of attention due to what we understand about its actual known holdings of physical silver, that it simply appears to be much more solvent in its holdings than SLV. And we also have suspicions and evidence that SLV is just getting pounded with manipulation of short paper, as are futures. So SLV futures, whether it's the London bullion desks or if it's New York, Wall Street, at 8:39 a.m., just getting pounded with shorting. Obviously, we have to see reasons for that to continue, and in my opinion, it's got to be the fuels. We've got to see dollar weakness, and we got to see interest rates fall. So it is still within a nested 1-2, and for all of the weakness there, I would just call this a cup and handle. So we've got a very, very bullish setup. It closed right on its 21 EMA. SLV closed below it. I'm gonna just kind of disregard that based on what we know about SLV, and it, as long as it can hold 22.74, if it can hold 22.74, we're giving this sector a fighting chance. If it cannot, unfortunately, this is most likely an ABC, an ABC, and we're going to do another ABC, and that's going to be the bear in stocks as well. Okay, back into the daily on SLV, and we're going to see just that tumbling down after we really lost the MA cluster here on February 26th. Just a tumbling down. You're going to see that low holding just above the low that we have right here. 2274, that is the extremely important marker. It's actually 2284 for the internal wave count to remain valid. Okay, let's now look at, I want to make sure that I got through all of the weeklies. Yeah, let's look at some individual names on the weeklies. So a big name in the sector, CDE. I really like the potential of the weekly hammer. So I'm giving you the maybe because we didn't get full resolution of the metal. I'm giving you the positive of the maybe now because we did get hammer candles in the names. So we see yet another test of the 34-week EMA. Various names like to test various EMAs. So I actively keep the 8, the 13, 21, and 34 kind of rolling through my indicator list to check. Some will hold themselves at the 8 and 21s. Others require the 34. You saw that on Apple if you watched my Stocks A to Z video. Here, CDE appears to need to pull back consistently to support at the 34. It did it again. It almost closed above its 13. We get that close above back in the channel, and we are within range for explosive moves. I still am committed to the thesis that if we get the resolution that I'm speculating in the general market, that this sector will outperform. And Friday for me was make or break. Friday was going to be the day. I had all of my sell triggers lined up and ready to fire, and I didn't. I did not sell them. And we're going to see if that was extremely wise and profitable or if it was foolish. But based on what I saw at the end of the week, there's reason to stay in these trades. Okay, CDE on the daily, there isn't too much to show other than that it's formed a 1-2 here. You can see those targets. Yes, I do think a doubling is possible within 6 to 8 weeks. Okay, one that has been much more disappointing is Fortuna. SFSM, I almost cut this one loose I held it based on the strength in the other names, but this was extremely disappointing. Lost its 8 and 21. And, we're just kind of holding out that it's going to bounce if the rest of the market bounces. This pivot right here at 774, it's got to be conquered. And if it can, the targets are incredibly bullish. But this is one within the sector that I wanted to point out to say that I'm less confident as of the weekly close. Okay, we can look at Hecla. Now, Hecla, a bad overall week. But I do want to point out that it did punch and pull back up above its 21 week, and we can see here almost a close back above its 8-week EMA. And what you would see, I could easily connect this with the bull flagging pattern. So once that pattern breaks up, we've got extremely ambitious targets in Hecla. Okay, so I want to finish by talking about Aya. And you're going to see just an outrageous weekly chart. Aya was up 42% this week, and basically all of it happened on Friday. This is the kind of outperforming move that I'm talking about. When the triggers go, we could see weekly moves like this over a sustained period. We could see a 4 to 5 week run where, yes, it's volatile and a little scary. It reminds me of Bitcoin in that way and other cryptos, but the outperformance is obvious. And I was very fortunate to have added to my position on Aya on Thursday. So that was one of the best trades that I've made this week. I was even profitable immediately on it for the week. And looking long term ahead is a great name for you to consider. I think it has even tremendous upside beyond what it was just able to do at the end of this week. Okay, so we're far from out of the woods. We've got to see that immediate resolution. We can't see more channel failure and EMA failure, and we're going to see if the fundamental fuel for the sector is still able to burn hot, or is it just going to fizzle? And if it does, as I had indicated in last weekend's video, we're going to see the general market continue to tank. So did we get the weakness in metals this week? Yeah, we got the weakness in miners. Did we see the weakness in stocks? Absolutely. And I had told you, I give you a chart of GLD, and I could go back to that on the short term. I could tell you what the markets did for the entire week. So here we are. What did they do? This is exactly what they did. Now, we got the big bounce in stocks at the close. So are we going to see that follow through, or are we going to see maybe a dead cat bounce? That's why you got to stay tuned for next week. And it's definitely a pivotal time. But honestly, I couldn't be more excited for the possibilities.